Welcome back to BitcoinDorks, your daily destination for all things crypto related. Today, we're delving into the world of cryptocurrency regulation, with a spotlight on Canada's evolving stance on digital assets. Once hailed as the crypto king for its progressive approach to blockchain technology, Canada now finds itself grappling with the challenges of fraud and money laundering in the crypto space. Canada has long been regarded as a cryptocurrency-friendly jurisdiction, with its government and regulators taking a relatively hands-off approach to the burgeoning industry. This approach has fostered a thriving ecosystem of blockchain startups, exchanges, and other crypto businesses, attracting talent and investment from around the world. However, recent developments have cast a shadow over Canada's reputation as a haven for crypto innovation. One of the main issues plaguing Canada's crypto industry is the prevalence of fraud and money laundering schemes involving digital assets. Despite efforts by regulators to crack down on illicit activities, such as implementing strict KYC, Know Your Customer, and AML, anti-money laundering, regulations, bad actors continue to exploit gaps in the system to carry out fraudulent schemes and launder money through cryptocurrencies. One of the most high-profile cases of cryptocurrency fraud in Canada involved the collapse of Quadriga CX, once one of the country's largest cryptocurrency exchanges. In 2019, Quadriga CX filed for bankruptcy following the sudden death of its CEO, Gerald Cotton, who was the sole custodian of the exchange's private keys. As a result, millions of dollars worth of customer funds were lost or inaccessible, sparking outrage and scrutiny from regulators and law enforcement agencies. The Quadriga CX debacle shed light on the need for stronger oversight and regulation of Canada's crypto industry, prompting calls for reform and tighter controls. In response, Canadian regulators have stepped up their efforts to combat fraud and money laundering in the crypto space, implementing new regulations and enforcement measures to hold bad actors accountable and protect investors and consumers. One such initiative that's gaining traction in Canada is the proposed regulation of cryptocurrency exchanges and other crypto service providers under the country's Proceeds of Crime, Money Laundering, and Terrorist Financing Act. The aim of this regulation is to bring crypto businesses under the same regulatory framework as traditional financial institutions, ensuring that they adhere to the same stringent anti-money laundering, AML, and Know Your Customer, KYC, requirements. If passed, this legislation would mark a significant milestone in Canada's efforts to combat illicit activities in the crypto space and protect investors and consumers from fraud and abuse. Under the proposed regulation, cryptocurrency exchanges and other crypto service providers would be required to register with the Financial Transactions and Reports Analysis Centre of Canada, FINTRAC, the country's financial intelligence unit responsible for detecting and preventing money laundering and terrorist financing. Registration with FINTRAC would entail compliance with a range of AML and KYC obligations, including customer identification procedures, transaction monitoring, and reporting of suspicious activities. For cryptocurrency exchanges, the proposed regulation would necessitate the implementation of comprehensive anti-money laundering, AML, and Know Your Customer, KYC, controls to ensure the verification of the identity of their users, diligent monitoring of transactions for any signs of suspicious activity, and prompt reporting of any unusual or potentially illicit transactions to the Financial Transactions and Reports Analysis Centre of Canada, FINTRAC. These measures are meticulously crafted to serve multiple crucial purposes within the crypto ecosystem. Firstly, they act as a robust deterrent against criminal elements seeking to exploit crypto exchanges for nefarious activities such as money laundering or terrorist financing. By requiring exchanges to thoroughly verify the identities of their users and diligently monitor transactions, regulators aim to create a formidable barrier that obstructs the flow of illicit funds through the crypto industry. This, in turn, contributes to the broader goal of safeguarding the integrity of the financial system and protecting both investors and the general public from the risks associated with illicit financial activities. While the proposed regulation represents a significant step forward in Canada's efforts to regulate the crypto industry, it also raises questions and concerns among industry stakeholders about the potential impact on innovation and competition. Critics argue that overly burdensome regulatory requirements could stifle innovation and drive legitimate businesses out of Canada, pushing them to relocate to more crypto-friendly jurisdictions with less stringent regulatory regimes. The proposed regulation also poses challenges for smaller crypto businesses and startups, which may struggle to comply with the costly and complex AML and KYC requirements. This could create a barrier to entry for new entrants into the crypto market and disproportionately impact smaller players, limiting competition and innovation in the industry. While these regulatory measures are aimed at curbing illicit activities in the crypto industry, they also raise concerns about stifling innovation and driving legitimate businesses out of Canada. Critics argue that overly burdensome regulations could deter investment and innovation in the crypto sector, pushing businesses to relocate to more crypto-friendly jurisdictions with less stringent regulatory requirements. Despite these challenges, Canada remains committed to striking a balance between fostering innovation and protecting consumers in the crypto space. The government and regulators are working closely with industry stakeholders to develop regulations that address the risks associated with cryptocurrencies while supporting responsible innovation and growth. In conclusion, Canada's journey from crypto king to grappling with fraud and money laundering underscores the complexities and challenges of regulating the burgeoning cryptocurrency industry. While the country has made significant strides in fostering innovation and adoption of blockchain technology, it also faces significant challenges in combating illicit activities and protecting investors and consumers. Moving forward, Canada will need to continue working closely with industry stakeholders to develop effective regulatory frameworks that promote innovation while safeguarding against fraud and abuse in the crypto space. That wraps up our exploration of Canada's evolving stance on cryptocurrency regulation. If you found this video insightful, be sure to give it a thumbs up, share it with your fellow crypto enthusiasts, and subscribe to BitcoinDorks for more daily updates on cryptocurrency markets and news. Thanks for watching, and until next time, happy hodling.